Good morning, everyone, and welcome to the European crossover. And we've seen the euro going and slide back after a rather uneventful FOMC. And obviously, what's got everything stirring is the Italian budget concerns and a meeting that was looked like it may be called off. And now they're saying, no, it's not called off. It's actually on tap. So we'll go in and take just a quick overview, and then we'll get into the news regarding that. Just one moment. So our target right now, we'll just do a quick flyby, and then we'll go on and get into the news. And going to see what we also have on the economic events for today. Obviously, the usual staple on the Thursday is going to be the jobless claims. But, the big story for the day, for the week, was the FOMC. And what we're looking at, we stayed pretty much tied into this range here. And then we got this break below the 1733, which on a very short-term basis, targeting the 1670 on the break of that. Now, the euro has since rebounded because they came out with the story saying, no, the meeting is still on. But certainly the euro is susceptible to this move back in here. We weren't able to go in and break out. The dollar hung around. Also, looked like, either way, we're going to go with the technical since we just couldn't get anything to go in and fly here. Either direction post FOMC, other than this quick pop we saw in the euro, and then we stayed confined within this 1733 to 1771 area for most of the day there. You can see this, you would think this is maybe a 30-minute chart. It's actually a 2-hour chart, and we stayed relatively quiet. Market was just hanging around 1750, and then we broke on that news that looked like the Italian budget meeting might be called off. They came back to say, no, it's on tap, and we'll get to that. We do have a little bit of it's almost like a little hammer, but I think after breaking here from the technicals, the euro may have a tougher time trying to reestablish itself. It would take some incredible good news to go in and get past, but if it were to, we'd have to get past 1771 on a 2-hour chart. So probably any moves back in here likely to be faded. This had more to do with stops. I think yesterday after we were trading here in the middle here, there was no movement. Even Asia was trading fairly tight. There was no real break on either side. You can see here we stayed relatively quiet in here, and it was just a matter of the stops being hit. And certainly that's what happened on that Italian budget news story. But we'll go in and take a look at the technicals, and then we'll look in the news where we stand post FOMC, and then we'll get into the bias chart. So we did have German CPI come in this session, actually a little bit stronger. And really what we're looking at now, because we already have the news that's come out, Italian producer prices index, Eurozone sentiment, consumer confidence, sentiment numbers came in just pretty much flat for the most, maybe just a hair bit better than expected. But as we're going to move on down here, we're going to be coming into the U.S., and we have durable goods coming in today. Obviously, also export sales, but of course, our staple being the jobless claims will also be out at 8:30 Eastern. As well as GDP. Final look at GDP here. Of course, there's our jobless claims and pending homes. And a little bit later on at 11 a.m. Eastern, a real third-tier data is going to be the KC Fed manufacturing. But as I noted, this, to me, I believe the movement we're getting now is really about the technicals, and that Italian job story, or Italian budget, story, is really kind of like what knocked us out here. the market was susceptible to push on either side of 1771, 1733. We were actually trading smack dab in the middle, about 1750, and then we broke here. And the pressure probably going to remain the same despite the thoughts that the Italian budget meeting will still go ahead. Let's move this out of the way. So post FOMC, let's go in and let's go in and reset our bearings. Now, I have it here with the Canadian dollar, and the dollar CAD has really moved high. I know Blake has been long here, the dollar CAD, and did some analysis here for, on the ForexAnalytix, what we're looking for on the dollar CAD, and potentially we're looking for a move right up into here, this 30.93 with 30.96 and a potential stretch up here, just up here around 31.23. But this market's still doing very, very well. We finally have broken away from this 29.73. We're going to get into that, but let's go and take a look where we stand as far as the news. So it says the dollar CAD is broken to the upside from the 29.73. The target is 30.93, confluence with 30.96, which is a 61% of this entire move of 28.46 to 32.26, with a potential stretch to 31.23. A 2-hour close below 29.62 would invalidate the upside, and support comes in at 30.02. So here we are. We're looking for a move. You can see right here with the ForexAnalytix. The target is going to be 30.93. And that's on a short-term basis. I think Blake's saying that we could really move much higher. But on a short-term basis, we're looking at this 30.93. And that actually confluences with the 30.96 being the 61% of this entire move here. 28.84 to 32.26, and you can see that with a possible stretch to 31.23. That was that one area we thought if the initially when the market broke, this was going to be an optimal area to sell against, which was at 31.23 at the time, and then we just kept breaking even lower. But that would be the target, the 30.93 with confluence with 30.96. You can see a good level of resistance here, with possible overshoot here to 31.23. But let's go on and get into the news, get an overview, and see where we stand. Canadian dollar hits a 1-week low and concern trade deal will bypass Canada. The Canadian dollar weakened to its lowest in more than a week against the greenback on Wednesday as the Federal Reserve hiked interest rates, and investors worried that Canada would be left out of the trade deal with the NAFTA counterparts. Canadian Prime Minister Justin Trudeau shrugged off the U.S. pressure to quickly agreed to a deal with the North American Free Trade Agreement and indicated it was possible the 3 member nations might fail to conclude a new pact. The Trump administration official said the text of a side deal that the United States had reached with Mexico was set to be published on Friday. The United States moving ahead without Canada shows that Canada may be left out altogether, said Adam Button, currency analyst at Forex Live. I believe that is a remote possibility, but it's slightly higher than it was before, and that's why the Canadian dollar slumped. Price of oil, Canada's major export, eased after the U.S. data showed a surprise build in domestic crude inventories. U.S. crude futures settled 1% lower at 71.57. And on to the Aussie. Aussie dollar and New Zealand dollars hold for now as the U.S. rate gap widens. The Australian New Zealand dollars flatlined on Thursday after foreign central bank policy meetings at home and abroad produced few surprises, leaving investors with nothing new to trade on for the moment. Governor Adrian Orr did admit any mention of any sinking business confidence as a risk to growth was that in the central bank's last monetary policy statement in August. Yet he also stuck with the projection that rates would stay still through 2019 on through 2020. The RBNZ statement gave a little, then took a little, but reaffirmed us of the current rate trajectory, said Jared Kerr. To everyone in New Zealand and those trading the Kiwi instruments internationally, the cash rate is going nowhere for 2 years. The message is clear and the message is consistent. The diverging paths that have taken the New Zealand dollar and its 2-year yields basis below those in the U.S., a major reason the Kiwi has shed more than 6% this year. The Aussie, likewise, has lost 7% this year as the RBA has kept rates at 1.5% and shown every sign of staying there for a long time. Seems as though the RBA won't seriously consider raising rates until the second half of next year at the earliest, argues Paul Dale, chief Australia economist at Capital Economics. The Fed might well have hiked 2 or more 3 times by that time, taking U.S. rates to nearly 3%. That's why you've seen that major gap there. Now moving on to the story here that really grabbed it is what knocked the euro lower. And let me take a look real quick on something. Yeah, this was the update to that story. Here, and we'll just move on to that. It says Italy budget tussles goes down to the wire and upsets markets. Hence why we saw this drop here in the euro as it broke the 1733 and really opens the door for our target. And this is analysis we did in the Asian session, down to 1670. We actually have a target of 1668. If we go in and break on here, and the euro's going to have a tough time trying to reestablish itself. But let's move on. Italy's new government struggled to contain a fierce internal battle over fiscal policy on Thursday, hours before it was due to unveil its 2019 budget terms, sparking a sell-off of state bonds and reviving fears the economy minister could quit. Bond yields surged on the fears the battle between the ruling party leaders and fiscally conservative minister could lead to a delay in the much anticipated release of the budget targets due to be agreed by the cabinet this evening. Prime Minister Giuseppe Conte's office had denied the cabinet meeting will be delayed. It's currently expected to start at 6 p.m. Rome. Investors had interpreted an unsourced report in Corriere della Sera newspaper that the meeting would be pushed back a day or so as assigned economy minister Giovanni Tria may indeed resign despite repeated denials from his office, the latest of which came on Thursday. Before the cabinet meeting, Conte, Tria, the leaders of the 2 ruling groups, the anti-establishment 5-star movement and the right-wing League Party, and other key ministers will need to hammer out differences. 5-star leader and Deputy Prime Minister Luigi Di Maio said. 5-star and League are pushing Tria, an academic not affiliated to either party, to ramp up the fiscal deficit. Now, they have been talking about expanding further. I think they were looking at supposedly only 2.6% of the GDP, but they're looking to go and expand that. It's actually pushing the limit. But it says Tria softened initial resistance. The deficit should not exceed 1.6. And I did see some stuff over Reuters yesterday. They're talking 2.6. But it says not to exceed 1.6 of gross domestic product and is not willing to accept a ratio of around 1.9. That would compare with a current target of 1.6 for this year. Tria's Treasury Department forecasts that a 2019 deficit above 1.9 would put at risk containment of Italy's debt. Well, there's no doubt about that. Tria said on Wednesday the budget would include the party's flagship policies, including a basic income for the poor and lower retirement age, though it remains unclear how wide-ranging such measures will initially be and how they will be financed. The League and 5-star rivals, ahead of an inconclusive election in March, say they will govern together for a full 5-year term and phase in most of their policies gradually. Financial markets have been nervous since the government took office due to fears in its spending plans will boost Italy's debt, which is already the highest in the Eurozone after Greece, as a proportion of GDP at around 131%. Thus, you can see why the concerns are there. And you can see just a little bit of slight dip here in cable, not much. But it says here, British currency tumbled on Thursday as the back of a broad dollar gains after a U.S. rate hike, and investors waited for more Brexit-related headlines. Sterling fell more than 1/3% to 31.09. Political headlines continue to drive any price action on sterling with a broad risk appetite muted. UK's Minister Theresa May has said the EU needs to show Britain more respect and come up with its own alternatives to her so-called checkers proposal. The dollar rose against its rivals, particularly against the euro, as the Federal Reserve interest rates on Wednesday and left intact its plans to steady tighten monetary policy, while sentiment towards a single currency was dogged by Italian budget concerns. And on to Germany and the economic data that did come out warns of recession if the trade conflict escalates. This story was actually coming out yesterday on the wires, and part of the story was downplaying the significance, but said there was certainly, and it would be a potential impact, and that's certainly of no surprise. We'll go on and recap what happened with the Fed. The Federal Reserve raised interest rates on Wednesday and left intact its plans to steadily tighten monetary policy. The thing that folks are watching for, they went ahead and did, was remove the word accommodative in regard to the monetary policy, said Michael Roney. And the other thing was, you would have thought we would have got a bigger lift at that time. We're moving higher, and right now the analysis were if we get a 2-hour close above the 68, that we would punch up to 95.20. We'll get to that. Fed Jerome Powell said the removal of the wording, which had been a staple of the central bank's guidance to financial markets and households for much of the past decade, did not signal a policy outlook change. Instead, it's a sign that the policy is proceeding in line with our expectations. Powell took over as head of the Fed earlier this year, said at a press conference after the release of the statement. The labor markets continue to strengthen. Economic activity has been rising at a strong rate, it said in its statement. New projections, well, we're doing great as a country. Unfortunately, they just raised interest rates, said Trump, because we are doing so well, I'm not happy about that. I'd rather pay down the debt or do other things to create more jobs. Well, that was, the administration's concern with the Fed raising rates. And we'll move on to the bias chart. So as we move into the euro, 1691 was our support for yesterday. As we roll into today, it was going to be a bit of an extreme support, but we did break down, and today the low was 1685.5, essentially 1686. We had support as low as 1691. Initially on the movement, we popped up a little bit. We came down, and then we made a run up here. It looked like we might start to push higher, but we came back in and we stayed tied into the 1771, 1733. That's been key support for some time, this 1733. You can see that coming across. And on a break, and I actually had popped in a couple of times, just scalped a bit, and I actually stayed long right here. And then I got taken out this morning as we took out that 7. I gave it just a little bit of room, 1727. But I knew if we wouldn't break lower, I didn't want to stay because a 2-hour close, like I said, below 1733 opens the door. And this was our analysis last night on the Asian update. Breaking this 1733 and a 2-hour close would target 1668. Well, obviously the Italian budget woes or meeting woes is what drove us lower. We're actually staying right here. As I mentioned during Asian session, rather uneventful here. just hanging around, thinking they might be able to goose some stops just above 1771. But then we broke lower on that news, and we really pushed this market for what it's worth. And really, this opens the door for us to go and make a move down here to 1668. That happens to confluence with 50% of the 50% move right here. We'll take a look at that. See, that's coming in 50% of this move here, and comes in right there with some nice support here coming across. You can see that with these touches. So target's going to be 1668 at this point. And I'd mentioned that we didn't get that movement you would have thought to break either way after the FOMC. So we mentioned on the analysis is just going to be all about the technicals. And I think that's the case where there's going to be the dollar index, gold, euro. And so the target right now is this 1668 on this break here. I don't really see with the Italian budget thing and as volatile as that can move around, I don't see where all of a sudden the market turns around and reclaims and starts moving higher. So I think the market's going to be on defensive. I think today, this morning, was really more about these stocks being taken out. And I don't see where anyone's going to think, okay, now's the time to buy the euro and we're going to run right back up. Until this Italian budget situation gets out of the way, it's going to keep the market on the defensive. So the target, once again, is going to be 1668. We're actually going to use that as our support. Now, we know where the market broke from, which was 1733. So we're going to go with support resistance for the day is going to come in right there, 1739. We're going with the touches. That would allow them to, if they could, push past the 1733, but it would have a tough time. The only way you're going to invalidate that, you'd have to get a 2-hour close above 1760, really, to invalidate this move now lower. And really, this is just about the risk as you're going into the weekend, unless the Italian government can go in and get their whole act straight with this budget, and that's never been the case. Anybody's followed Italian politics, it's really just a sideshow at times. So going into a weekend, we've already broken lower. Anyone that was long here got knocked out. I don't see where they're going to try, and other than as if you were scalping it. Yesterday we did have our buy chart support for 1691. For the FOMC, well, we got to 1685.5 on this move and bounced back up, but don't see where there's a real drive to move a whole lot higher. It's going to make more sense for the market to come down here and test support. We could even make it all the way down to 58, but this 50% coinciding or confluencing right here, I like the 1668. So once again, resistance from a technical standpoint, well, they can go on and push this level, and he moves back to 33 would be look at a selling opportunity, but the resistance level will be right there, 1739. I thought we would resolve ourselves to the upside, and here's one of the things that's a little bit odd is that the Fed removed the accommodative phrase, although I think Powell did go and say, hey, look, this is really not so much a policy change. It's just reflecting that we're going along our path. So that probably took a little bit of the sting of taking that out, but I'm still surprised that the dollar index didn't respond more strongly to that. So we were left in a bit of a mixed bag here. And like I said, it was the Italian news that knocked us out of the box. But these markets, I think at this point, is going to go with the technicals. And I just don't see where the euro all of a sudden reclaims its bullishness. Even if we got some of the Italian budget, probably just rally back up in here and probably end up trying to use that as an opportunity to go in and get out if anyone had jumped up on the long side at this point. A bit of, like I said, a disappointing action coming out of the FOMC. I always thought we would have seen a break one way or the other. Let's go and take a look at where we stand here with the cable. We had a wider range in case we did get the wider range. We didn't get it. And let's go on and pull this back. Well, it certainly looks like it's a bit susceptible up here, unless we get some kind of news to push us higher. Now, they've been buying these dips, but it looks like it's susceptible to a little bit of a downside drag. Um, and we know that this 3056 is key. We talked about that yesterday. We showed this before. I don't have as much data loaded up on here. We could go to a daily or add longer, but 3656 is a pivot for us. But we're going to allow for this market to move actually a little bit lower and take out those stops. And we come across right here, and that comes into some steady volume there. So we're actually going to be looking for potentially, this could get to 3011, but boy, that's a long ways off. I'm going to have to truly break. This was a pretty good strong area on Friday. The market held, eventually tipped a little bit lower, but a lot of good volume there. So we're going to go actually with 3075 for support. Right there, coming across these touches. Market hung there for quite a while Friday before we would dip into like upper 60 and then move back up and stayed there. Eventually we got down to that 56 and popped back up. But we're going to go with 3075 on the potential that this thing could go in and break going into the weekend. I don't think it would break that hard, but it certainly have an opportunity to move a little bit lower. And at this point, I think he's going to have a tough time trying to move any higher. Resistance, you can see that here, right across the touches. It's going to be 3186 for resistance, 3186. But I think there's the possibility we can go on and break a little bit lower, goose some stops here, and come down as low as I said, the 3075. There'll be some support coming in around 3103, but let's go on and see if they were to push a little bit further. I think that's a possibility. On a little bit of a downside, they can move it all the way down to 75. Actually, going to make that 3078, and on the upside, as I mentioned, 3186. Now let's go on and move into the Aussie dollar. You know, we almost made up here in this 73.20. God, they made a pretty good run up there. And we know about how big of a deal is 73.20. I think we even gave it some extra room with FOMC. We sure did, up to 73.20 with FOMC if the dollar were to break down. Well, they made a pretty good run. We had that 73.20. I think we had it for the past prior 2 or 3 days prior to yesterday when we opened it up for 50, just in case it could. We saw the dollar weaken considerably after the FOMC. So resistance on a short-term basis is going to come in right here on the Aussie dollar, which is going to be 72.78. 72.78. This market may find itself having to do just a little bit more homework on the downside, but we're not that far away from support. So, but we'll be 72.78 here on resistance. And I'm going to go with support right there 7205, 7205 for support. Once again, tightening these ranges. We'd open up those ranges for FOMC. We usually don't have them that wide out, but certainly was expected with the potential volatility, which we did not see with FOMC, but we'll go on and move in now to the Kiwi. To a certain extent, the Kiwi's been rather uneventful, but over the last few days, we've had a little bit of movement here. Resistance, I think, is going to have a little bit tougher time. But coming right there, 66.75. Not that far away, but I think this is where the market, and he runs back up here. This is where there's going to be a little bit of a headwind here at the 66.75 here for the Kiwi. Same thing here, tightening up these ranges post FOMC. And I like this move down here to the 50% of this range here. Straight up here, 66 cents, 66 even, like that. I like this for support coming right back into the 50%. You can see the touches coming across here, right there. Makes the most sense if you're bearish as far as a target. Look at the euro coming back a little bit under pressure again after getting up here to 20. Now let's go into the dollar CAD. Now Blake has been all over this, and Blake liked it on the long side, and it's really held up well. You know, they made those stabs down, and they never could quite make. I mean, they came in within just a few pips of making to this 38%, but we did the analysis, or I did an Asian update. And my point was, hey, we've now broken away. And like I said, Blake was on top of this. I know Joe trades this very well. Joe in the chat room, she's probably like our loony queen. But 29.73, they broke away from this area. And we're looking at it on a short-term basis. I think Blake believes that we could move much higher based on all this NAFTA bit. But short-term basis, we're looking for 30.93. Which confluences here with 30.96, which is the 61% of this move. We'll take a look at that. You can see that right here. And like I said, on this show, we're pretty much focused on a short-term basis. Our outlook is always about 2 to 3 days out. So although I think Blake thinks that it could move even considerably higher, but we had a pretty good run already. I mean, as we've jumped up, I don't know. This is what I'm thinking that we would take. The market would look to take a bit of a pause, and but we've got 39.3, 39.6 to 61% with a potential stretch to 31.23. Right there. This is actually the area where at the time when the cat had broken, and we did the analysis, we said any moves up here, this would just be fantastic to be able to sell. I think at the time we had between 31.10 to 31.25, which was our area to, as we broke lower, to go in and get short on a pullback. Well, that did not happen. I mean, we just kept going lower and lower, and this market never really looked back. And I think that would be an area where they would try and punch up as high, which would be 31.23. But the target we've got here is going to be 30.93. On the short-term basis, confluence here with 30.96 to 61%. So we'll call this just 30.96. Support. It depends on how you're looking on this as a trade. If you're just looking to step in and try and take advantage of this move, support has to really come in right there. You can see that clear as a bell. 30.12. Right there. And I think we have to change this now on a very short-term basis to bullish, on a short-term basis. And let's go move in now to the dollar Swiss. Well, we will continue to go and chug along. We're actually making new highs right now as we speak. It'll be interesting to see how we'll close on this 2-hour bar. And we know this 97.04 is a key pivot. Resistance, you can see it coming across this little pop and then that little bottom there. So that's going to be resistance right there, which is 97.24. It's actually 23.5. We've almost come that far away from it. Got up to 97.17.5. It's going to be 97 right there. You can see that? 23, 97.23. So just about nicked it. We had those wide ranges to take in the potential volatility we would have seen after FOMC, but that volatility did not materialize. And support, you see this level coming across, which come in just a hair below that, and that's going to be 96.48. 96.48 for support. I mean, we're susceptible. I don't want the supports to be so close. And if you were scalping this thing, it'd be how about right there around 96.75. But we've already had a nice little run. If we pair back, realistically, where support that they can pull back to, can target, would be 96.48 here on the dollar Swiss. Now let's go into the dollar yen. We're still hanging around these highs. We've had that 1284 since we had for over a week, or almost a week, and the market's still hanging around here. You can see here they eased back from 1284. They reasserted themselves, and 1284 was a little bit of an area of a battleground before we moved higher, slipped below it, and we're back up here, this 1284. This may be a little bit interesting. Some people, there's a few people in the room that are trading this, one of the things we're finally starting to see is this move up here in the bonds. They're starting to pull away from these lows. Not much to speak of. We need to move higher. Our resistance, I believe in the bonds, was 4101. Yeah, 4101 was our resistance. And we made it all the way up here to what? 4103. And we paired back to 4022. But the reason I'm pointing out the bonds because, you know, the Japanese, the dollar yen has an inverse relationship with the bonds. And maybe we're starting to see these bonds kind of get a little bit tired of staying lower. Maybe doesn't mean they're going to take off like a rocket, but maybe most of the downside is set in. We know that 4022-ish, 4025 is a huge area going all the way back to 2009. So that's what I'm saying. Maybe the market will start to, little by little, start to lift ourselves up. If that's the case, that would end up ultimately weighing on dollar yen. And dollar yen's at a pretty key area, this 1284. Not a whole lot happening. I'm going to reassert that 1284 back in. And I mean, you can make a point where this can go higher, but the idea that the bonds are starting to, I wouldn't necessarily go as far as they're starting to base yet, because they are, it looks like they're starting to get a little bit tired of being down here and trying to push up a little bit. But if we can pare back and hold this area, they may be starting to base a bit. With that, we're going to go back to our old friend, which is 1284, right there. So that's going to be resistance, almost basically right where we're at, off by about maybe up by a little bit of a tick. Obviously, we had the wide ranges to allow for the FOMC, but we're going to go with 1284 with support on a short-term basis comes in right there, 1242 on a short-term basis. So right there, we're at 1284 right now, 1283.8. It's going to be 1242. But keep an eye on those bonds or 10-year notes, whichever one is the one you like to go on and follow. You want to go and keep an eye on that. That's going to go on and dictate what's going to happen for looking further out with this dollar yen. I think it's going to have a tough time trying to get up in this area or go beyond it. If U.S. yields start to ease back just a bit. And certainly they could do that. They've rather overextended, but we'll see what happens. Now let's go and move in now to the cash dollar index. Now, I thought we would have seen a lot more volatility after the FOMC. We didn't, especially when they removed the word, the accommodative portion. I thought that we would really start to do something with that, and we certainly did not. But looking at the technical analysis did in Asia for the Asian update in ForexAnalytix, our resistance is 94.68. You can see that here on the 2-hour chart. So a 2-hour close below this, above this 94.68 opens the door. I think goes to 95.20. Now you know that our resistance had been this 95 area, and 95.32 was the early resistance as far as invalidating the downside move. I don't know if the market has enough oomph to make it there to 95.32, but I think that a break of this takes this rather quickly, where the market will probably find some resistance, is going to be this 95.20. So although short term, it's right here, this 94.68, that's the trigger. And I think that can be taken out. And that would coincide here with this euro sliding back and reasserting itself to go towards a target, a short-term target of 16.68. So when I look at the resistance, I think you can quickly get up to the 95.20. So we're actually going to use 95.20 as our resistance for today because we're not that far. Look at that from 68. And to me, that's going to be a trigger right there. They close right there. I think it'll be a quick move up here. Not a stop move in the sense that it flies up there, but I think it won't have too much trouble and eventually get up there close to 20 before it maybe stalls. So I'm going to go with all the way with 95.20. And I think we have to change this back to range on the euro. And the dollar index, it's still bearish, but I think on a very short-term basis, we'll have to go with the range also on a very short-term basis. You can see we're trying to push up a little bit higher. Support comes in. This is the key area. Also, a break below this 93.98. Certainly doesn't look like it, but if we saw that, my support was going to come in at basically 93.02. I thought we'd make a quick hard fall. Obviously, the Italian budget news is what got everything all rankled, and so it looks like we're trying to push up higher here with the cash dollar index. So where's going to be support now? On a short-term basis, right there, 94.19, 94.19. And let's go on and move into gold. This is a big one here. If we lose this 1197, we did the analysis also in ForexAnalytix. This was in the Asian update. And obviously this is being pulled by what's happening here with the dollar. And also to a certain extent the euro, okay? But it's been the entire week all about 1197. And the market's done a pretty good job holding this 1197. A 2-hour break of this 1197 is going to target, our target is going to be 1179. 1179 here. I think that a break here, 87.50 may just be a pause. I'm not saying we don't bounce a little bit and really got some support 85, but I think you'll send a lot of people to the sidelines on this one, and the overall target would be 1179. That's going to be the 78% of this move, and we'll take a look at that. Right here. From 1167 to 1220. It was 1220 and change, but we'll call it 1220. It's also the 127% of this move right here. I'll show you that. Right here. So you have some confluence there and a support level coming in right there at 1181. 1179 is 78%. I like a little bit of an overshoot. A break of this area is going to go in and send this market down there. So let's take a look for support. So we're not going to go all the way down there in one fell swoop, but support then on a very short-term basis, bounceable area is going to be 1191. And be careful, we hit this 2-hour close below 1197, and boy, we can flush out some folks. I think it's going to send some people definitely to the sidelines and feel that this market, and you can imagine, look how much work has been done here. So another way to look at this also is now move that range down here and look how far we can go to 1174. Because look at all the work that was done in this range. You see this range? And just drop this range. That opens the door to 1174. Actually 1173, but my point being is that this market will be under a world of hurt if we get that 2-hour close below 1197. So short term, support would be 1191. A move above, and we did the analysis, a move above 1208, 2-hour close opens the door for a move right up here at 1219. That might be a tall order unless we get this dollar to back down. Therefore, resistance is going to come in right there. I'll call it 1203. And let's go move into the 30-year bonds. Well, it's a little bit early to say we're starting to base, but we know the significance of 4025/4022 goes back all the way to 2009. We had a resistance yesterday at 4101. It got up to 4103. Resistance, if we can get beyond this area, is going to be, I'm going to go right here with this 4127. Because if they take out 4103, they're going to zoom. And that would be the target up there. It would be 4127. We had 4101. The high was 4103. But we've got to go on and move this, because if we do take that out, then the thought's going to be, hey, you know what? We've run as far as we can for the yields. They're going to at least correct. So we're going to move this to 4127. And let's take a look here for support. That would be support here, 40.10. It's still a ways down if you think, considering it's trying to base, but as I mentioned yesterday, we had our resistance at 41.01, made it to 41.03 on this run up here. I think that on any dips back, the market will be looking to go on and buy back any shorts. It's 41.10, 41.14. We'll split the difference. We'll just go with 41.12 for support. But on a very short-term basis, it looks like momentum's starting to change for the bonds. And I think that any pullbacks will be used as opportunities to cover shorts or step in for those that are trying to buy this market. Bonds have had a pretty good run. We'd actually made up to that resistance at 34 and had initially paired back. And look at this nice big run. Obviously worried about the Italian situation. Now they do say that budget meeting group, whatever, is going to go on and take place anyway, although there was a report that it was not. Certainly had a big run up in here in the bonds, and they've since paired back. A ways off, but it would be that 58.53. And all they need is another story to come out, or if they don't meet, and the market could quickly slide back. The slide back as far as rally, the rates pair back. So we'd be looking actually at 58.53 for resistance. There's going to go support. Right there's 58.19. And they're starting to get all over the place. Be careful with the bonds with this whole Italian story, because it can really get running and get out of hand. We've seen those moves before. But if you're looking at the risk, it would be 58.19 on any type of the longs. That would be our support area. Well, we had 12,377 as our resistance on the bunds. And they made it to 12,380. Well, not bad, not bad. So we had 377 resistance. They've come as high as 380.
Clean it up, Paulie. I don't want you to be off by 3 pips on your inflection points anymore. All right, buddy.
Good morning, dear. How you feeling?
Good. I'm doing all right. I'm into my fib retracement. I'm 61.8 back now. But really, another great example of your inflection points, and just couldn't help myself, you know.
Okay,
next time, be perfect, okay, buddy?
There you go.
All right, man.
We'll move this down here to 12,368, and we're actually just going to finish up right now with the DAX support. Pairing back on here, we've already had a nice little run. This market was so oversold to start with, but support now is going to come in right here at 12,331. We're not that far away, 26 ticks away, but I think your initial support, 12,331, and that's going to wrap it up for the European crossover on the bias chart.
Great show.
Thank you very much. How you feeling?
Okay, I'm ready to go. We have viewers from investing.com with us today, Paulie, so I'd like to introduce you. Anyone who came here earlier, Paulie is a great short-term scalper, day trader, swing trader, and has joined the team and will be here an hour before face every day, providing his bias charts as well as his like you just saw with the Bund. A lot of his areas are extremely tradable, tight risk type of entries. So I encourage everyone to get up and check in an hour earlier to catch Paulie. So thank you, buddy.
Well, thank you, Dale. Thanks for the kind words, and we're glad to have you back. I know that pneumonia, that's no fun thing, and it does take a little bit of time to get over. So we're glad to have you back in the community.
Yeah, I appreciate it, man. I'm not doing any 10Ks. It's like, everyone said, Dale, don't rush to come back. You'll relapse. And I said to them, well, it's not like I'm going out with a shovel and a pickaxe every day. I'm just talking, I'm blabbing. So, I'm trying to pace myself, although I was on Twitter till 6 o'clock last night. So I tell you what, Paulie, you find out something, and you talked about it when you were laid up, that your health is everything. And pips are great, but you don't want to spend them on doctors. So it's important that traders really take care of themselves and work out and eat right and sleep, because it's kind of a high stress gig, don't you think?
Oh, you got that right.
Yeah, so you have to really, like an athlete, to be in your highest performance zone, you have to take care of yourself. So I'm going to take over the screen here, partner.
Sounds good.